Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The dollar index hovered just below 98 on Wednesday, struggling under the weight of disappointing US labor market revisions. With last week's weak August payroll still fresh, investors are bracing for a Fed rate cut next week. Markets are currently pricing in a 25 basis point move, though some are hedging for 50. In total, traders expect about 66 basis points of easing this year, with inflation data still to come. WTI crude pushed higher to around $63 a barrel on Wednesday, marking its third straight day of gains. The move came as Middle East tensions escalated, raising concerns of supply disruption. Israel confirmed strikes on Hamas leadership in Doha, Qatar, warning of further action in Gaza. The heightened geopolitical risk offset a modest OPEC Plus production increase for October, much smaller than prior months. Gold prices extended their rally on Wednesday, even as technicals signaled overbought conditions. Safe haven demand remained strong with the US, dollar under pressure, Fed easing expectations rising, and geopolitical risks intensifying in both Europe and the Middle East. Bullion found buying interest near 3,619 and rebounded above 3,650, with Tuesday's peak at 3,675 back in focus. Reports of Israeli strikes in Qatar and Poland shooting down a suspected Russian drone added further support. The dollar lost momentum against the yen in early Asian trading, slipping to around 147.35. This piled pressure on the Fed and kept the dollar soft. On the Japanese side, political uncertainty resurfaced after Prime Minister Shigeru Ishiba resigned over the weekend. Leadership elections are expected in early October, and questions around Bank of Japan policy normalization persist. Together, these cross currents left dollar-yen on the defensive. The euro eased back toward 117 on Tuesday after briefly testing 117.80 as a rebound in the dollar-capped gains. In Europe, the calendar remains quiet while markets await the next ECB policy decision. After a strong first half of the year, euro-dollar has spent the last 2 months consolidating at elevated levels. The pair reached a 3-year high in early Q3 before pulling back toward 114, only to recover as traders aggressively priced in Fed rate cuts.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.